Hello everyone, welcome to my channel. Today I'm going to talk about 8 tax deductions most people miss. Let's get into the video. Every year, millions of taxpayers leave money on the table simply because they do not know which tax deductions they qualify for. While many people are familiar with common write-offs like mortgage interest or charitable donations, there are numerous lesser known deductions that can significantly reduce your tax bill. Understanding these missed opportunities can help you keep more of your hard earned money. I'm going to discuss the 8 tax deductions most people miss and how to take advantage of them. The first one is state and local sales tax instead of state income taxes. If you live in a state with no income tax, such as Florida, Texas, or Nevada, you may be able to deduct state and local sales tax instead. Even taxpayers in income tax states can benefit if they made major purchases like a car, boat, or home renovations. The IRS allows you to choose between deducting state income taxes or sales tax, whichever is higher. Most people overlook these options entirely, missing out on a potentially larger deduction. The second one is student loan interest paid by someone else. If your parents or another family member help pay your student loan interest, you may still qualify for the student loan interest deduction as long as the loan is in your name and you are not claimed as a dependent. You can deduct up to 2500 of interest paid even if the money did not come directly from your bank account. This is a common missed deduction for young adults and recent graduates. The third thing is job search expenses in certain cases though. While job search expenses are no longer deductible for most employees, they may still apply in specific situations, such as for self employed individuals or those seeking work in the same trade or profession under certain state tax rules. Expenses like resume preparation, career coaching, portfolio cost, and travel for interviews may qualify. Many taxpayers assume these expenses are never deductible and fail to ask a tax professional. The fourth thing is self employed health insurance premium. If you are self employed, you may be able to deduct 100% of your health insurance premiums, including dental and vision coverage. These deductions applies even if you do not itemize deductions. Many freelancers, contractors, and small business owners miss this deduction because they mistakenly believe health insurance is only deductible if they itemize and meet high medical expense thresholds. The next thing is medical, miles, and travel costs. Many people know about deducting medical expenses, but many forget about mileage and travel costs related to medical care. You can deduct miles driven to doctor visits, pharmacies, hospitals, and even physical therapy appointments. Parking fees, tolls, and public transportation costs may also qualify. Over a year, these small expenses can add up to a meaningful deduction, especially for families managing ongoing medical care. The next thing is home office expenses, even partial use. Most people avoid the home office deduction out of fear of audits or confusion about the rules. However, if you use part of your home regularly and exclusively for business, you may qualify. This includes a portion of rent or mortgage interest, utilities, internet, repairs, and even depreciation. The simplified home office method allows a flat rate deduction, making it easier and safer to claim than many realize. The next thing is education and professional development cost. Courses, certifications, workshops, books, and professional memberships related to your current profession may be deductible. These expenses can be claimed as business expenses if you are self employed or a certain education credits if you qualify. Many taxpayers miss this deduction because they assume education expense only apply to college tuition. Continuing education that improves your skills can often be written off. The next thing is charitable contributions beyond cash. Most people think of charitable donations as cash or check contributions, but non cash donations, such as clothing, furniture, electronics, and household goods, are also deductible. Additionally, mileage driven for volunteer work and out of pocket expenses related to charitable service may qualify. Many taxpayers forget to track these items or underestimate their value, missing a valuable deduction. Why these deductions are often missed? These deductions are commonly overlooked because they require record keeping, awareness of tax rules, or proactive planning. Many people rely slowly on tax software prompts or assume they do not qualify without fully reviewing their situation. A lack of documentation, such as receipts, mileage logs, or proof of payment, can also prevent people from claiming deductions they otherwise qualify for. How to avoid missing deductions. To maximize your tax savings, keep detailed records year round. Track mileage and expenses monthly. Separate personal and business finances. Review tax changes annually. Work with a qualified tax professional. Proactive planning, not last minute filing, is the key to keeping more of your money. My closing thoughts on this is tax deduction ain't just for the wealthy or business owners. They are available to everyday taxpayers who know where to look. By understanding these 8 common missed tax deductions, you can reduce your tax bill, avoid overpaying the IRS, and make smarter financial decisions year after year. The tax code rewards preparation. The more information you are, the more you keep. The more informed you are, the more you keep. That's what I'm trying to say. The more informed you are, the more you keep. Thanks for watching this video and do not forget to subscribe to my channel.